Good morning, traders. Michael Sabo here with MF Global, coming to you on Thursday, October 27th, bringing you some opening commentary here in the energy markets. First off, let's do a recap. Let's talk about yesterday, December crude oil prices. You can see here on the charts here. Great day here for the bears yesterday. Real nice sell-off here that we saw going on. We saw highs earlier on here yesterday coming in below previous highs. We saw 93.92 lows. $90 there right on the dot, and a close there of around 90.20. Of course, after the pit close, we did come up a little bit higher than that. Nonetheless, a lot of weakness. Saw continued selling pressure in that market as that market was really pulling back. We got the DOE numbers that came out, and we saw, we were calling for, we were looking, expectations were initially, analysts were thinking around a build of about 500,000 barrels. API on Tuesday was reporting a build of around 2.6 million barrels. Yesterday's DOE numbers came out, surprise, very large build, coming in at around 4.7 million barrels. So certainly adding to the weakness of the market there. And what was interesting to note yesterday is that outside markets, i.e., for example, S&P 500, which was weaker there at one point, but actually then turned back up positive on the day and couldn't drag crude prices higher with it. So certainly was a little bit of a weaker tone going on there. Now, part of the reason for the big build in stockpiles is the refinery capacity utilization, which was actually off. That's currently, that was running roughly around 84.8, and that's running below the 5-year average. So when the capacity utilization in the refineries drop there, you see a little bit less demand for crude, which caused the stocks to rise there a little bit. So, we'll keep an eye on that and see how that continues to develop. Now, let's fast forward here to today. EU summit, a lot of optimism surrounding that. There was a bit of a Greek bond deal reached, so traders seem to be risk-on type attitude. They are putting the dollar under a little bit of pressure here this morning. Equities markets much firmer out of the gates. The futures were much firmer on the overnight. And that's helping to push crude prices back up. So currently, December crude trading around 93.32, which is up a little over $3 here on the day. Many of you know, long term, I'm a bull. Short term, I'm still looking for some downside action in there. By the way, if you're interested in a calculated risk option strategy for December options, give me a call. I got one that we recently started working on. I think looks pretty attractive. But nonetheless, you take a look at this market here, and there's a lot of volatility in there, which creates a lot of opportunity. I think we could see prices still pull back off of these levels that we're trading at here this morning, although I'm not looking for a complete reversal in there. So far, inside day, we'll see if that holds here or not, or if the market continues to firm. We could get a push possibly above yesterday's high, but I think you're going to see a lot of resistance coming into that market. Complex firmer. Take a look at Brent. We're up over $3 here right now, trading above 112. RBOB and Heat also firmer here. The RBOB 271.26. We're up about 8.5 cents. The Heat 309.10. We're up about 7 cents there. So much firmer tone in the complex as well. We have gotten, like I said, some support there out of that market with the U.S. dollar moving lower, and that's the thing you got to watch there is if this, the dollar is sometimes viewed as a safety or a safe haven. So you see people bidding that dollar up as we saw over, several weeks ago. And when the risk starts to, risk off basically, or excuse me, risk on attitude starts to come into play there, you can see the value of that dollar falling. And that can be supportive to a lot of commodities, not just oil, but a lot of commodities out there. And I think that's kind of what you have going on right now. But again, I think that the market itself right now in terms of crude oil technically I think is a bit overbought, so we got to watch. There could be some good opportunities there to look to come in on the short side of that market. But again, long term I think you want to be still bullish. So be cautious in that market regardless of which side you're trading. There's a lot of volatility. There's a lot of wide range, pretty wide ranges in that market. So you can give me a call on the trade desk. I can discuss with you some different strategies there. Nat gas, we do have an inventory numbers coming out there. Looking here this morning to see a build of about 85 to 95 billion cubic feet. So, or injections there. So we'll keep an eye on that and see what that does here. Currently, nat gas bucking the trend. It's off a litlittle bit around 375.80, down about 1 to 2 cents. No surprise there, simply because that market continues to kind of be range bound, building a bit of a base. Call me on the trade desk if you'd like to talk a little bit more, 1-800-798-7671. Be more than happy to speak with you in more detail. And of course, remember that past performance is not necessarily indicative of future results, and the risk of loss does exist in futures trading.